Hi, this is Jeffrey Kurt Financial Group, and today is Wednesday, September 25, 2024. Had lunch with a client yesterday, and he asked the question, well, what should we do about, preparing for the election? And what are the markets going to do? And what if there's some crazy stuff happens, and how should we prepare for it? I think this type of question is on a lot of people's minds. And I think, as I said to my client, I just don't know if that matters at this point. And we pointed to many other geopolitical developments and, crises and like that, and yet stocks go up. Now, I'm not saying it's logical, but I think it points to what is really going on mechanically with the stock market now. And so much of it's driven by, algorithms and computerized, trading and like that. I had a recent webinar where someone quoted that there's like 20 to 25 trillion dollars that get put to work in the investment markets without a human decision. That's either algorithmic or it's a passive investing style. For example, if you buy an index fund, you buy, the $1,000 of the SPDR or the QQQ, they don't wait. That money gets invested in whatever the components are of that index. So I think there's an important part of the market that doesn't look necessarily at headlines or whatever a narrative is. And also, to further answer the question, with recent developments concerning the short-dated options, the zero DTE, zero date to expiration, daily options for the S&P and the QQQs, the hedging, nobody hedges long-term. And so I think that there's this mindset that amongst traders and institutions, when something comes up, well, we're going to hedge for it the day before. And it's what happened last week with the Fed interest rate cut. It was some risk that he wasn't going to do it. Some risk was only 25 basis points, and the hedging took place on Monday, Tuesday. It wasn't before. So right now, I think it's interesting that the volatility positioning, both in options and positioning amongst institutions, for the rest of this month, there's like nothing going on, and it paves the way and has a setup that things could grind higher. Now, I think there's short-term resistance here, and there's also some end of the quarter rebalancing and stuff like that that's going to take place next week. But I just, the markets are not set up for any big drop unless there's a new catalyst that comes up. And that's not to say it can't happen. But to think that there's a lot of, risk surrounding the election or surrounding some other narrative, the market's kind of ignoring that. And I think that is, something that's difficult for us to think about, that there's we need logic in terms of how we make decisions and how we connect to different things. And sometimes it's just not happening now with the markets. Now, that does point towards a lot of complacency, and that's a danger and that's a risk when there's not much, people that are one-sided in terms of the market. So wanted to pass that along, a little bit lengthy. Give me any comments, any questions concerning this. I think it's an important part of the market that's really not necessarily understood or recognized. Thank you for listening. We'll talk on Friday. Goodbye.